really very grateful to be here because I think that this is a great platform, and someone before mentioned that we should all work together to change things, and I completely agree. I think the problem it's so important and the gap is so big that nobody on his own will manage to close it and to change things. So thank you very much for being here, and I hope that this is an open discussion because I'm not teaching anything. I would rather be glad to have an open discussion and exchange our opinion on the delicate topics that I will touch. What I will present today, I will start with some numbers about the protection gap. Then I will move to existing schemes. We have already discussed quite a lot some schemes today, and actually I had selected, I think three of them have been already discussed, which is good because I am not an expert anyhow. But what I want to highlight about these schemes, it's what is working and what is working less, because I think that all the schemes might work in different way in different countries. But what we can learn, it's always there is something to learn out of the schemes which are in place. And this will bring me to the main part of the presentation, where I would like to discuss what can be done to close the protection gap. So in this picture, I would like to show you the global loss in 2014. And this is from natural catastrophe and man-made disasters. And as you can see, the total loss amounts to US dollar 110 billion. And out of this amount, only 35 billion was insured. And this is 2014, but actually the situation has not changed much in the last 10 years. If we look at this picture, we can see that over the last 10 years, the gap actually has not improved, and the industry didn't make many progresses in terms of closing the gap. And Swiss 3 Sigma data, they showed that the average economic loss amounted to 180 US dollar billion, and 70% of this amount is not insured. Obviously, the situation changed a lot country by country and peril by peril. This is an overall view of the situation. And but one thing is sure: if the cost for natural disaster will increase in the future, and this seems to be the case, if nothing is done to close the protection gap or to improve the protection, the gap will increase. Okay, in this picture, I tried to show the differences between countries. I mentioned before that there are countries which are dealing better with the protection gap and countries which are dealing worse. Sorry. Yeah. Oh, thank you. And
it works.
It works. And as you can see on the left side of the graph, well, there is the insured portion of, this is it's an estimation of the annual expected cat property damage loss. And on the left side, we can see the insured portion, and on the right side, the uninsured portion. And these represent 30 countries, and more or less 80% of the total exposure worldwide. And if we look at these two results, we see that the annual expected insured loss is 50 billion, while the uninsured it's 120 billion. Obviously, there are countries which are doing much better than others, but we can see that the main driver of the result comes from USA, Japan, and China. So basically, to make big changes to the overall picture, something must be done in these three countries. And with this one, I did want to give you a little bit more concrete case to analyze. And clearly, developing countries, they present a bigger gap. For example, the recent loss in Nepal, probably less than 1% of the total loss will be insured. And this is a proportion completely different to the proportion of loss which was insured, for example, in New Zealand in 2001 with the earthquake loss, where more or less 80% of the loss was insured. But being a developed country doesn't mean necessarily that the country is doing well. In fact, we can see that the first loss on the list is Japan, and it's huge, and the gap is huge. And Japan was mentioned before. There is actually a scheme in place, but something clearly is not working. If something like this happens and more than 80% of the loss it's not covered. There are also other interesting cases, as you can see. What I did want to show you, also because of the focus of the conference today, it's the same picture for flood losses, which are, in my opinion, a little bit more interesting for this side of Europe. And you can see that the gap in this case, it's even big. And especially the two losses in China and in Thailand showed that the protection gap in this part of the world, it's big and something must be done. And actually, the big gap in China is one of the reasons why the gap overall is increasing, because China is gaining a lot of weight worldwide on the economy, but protection measures and also the building code and the awareness of insurance probably is not growing as much, and insurance is not gaining the momentum to increase the level of penetration. Now, let's move to the second part of my presentation, and this is about the existing schemes. As I mentioned before, countries are dealing with the natural catastrophe topic in different ways, and there is not a right or wrong way to do it. There are simply circumstances that communities are facing, and each country is trying to do the best. We heard before that in Turkey, the loss which happened in 1999 was the trigger for an insurance scheme. Unfortunately, in other countries, this doesn't work. For example, Italy, it's one of the cases. There were two huge losses, one in 2009 and the other one in 2012, and still the penetration is very low. So my point is that a scheme which is working in one country is not necessarily replicable in another one. But one thing is sure, that we can look at what is working and what is not working and try to learn out of it. And if we want to change things, maybe we should take into account some factors that are common to all the schemes. In general, when we think about an insurance system, the insurance system fall in one of these four categories: either public and mandatory, or public and optional, or private and optional, or private and mandatory. When a scheme is mandatory, obviously, in most of the cases, risks are bundled together, and the mutuality is quite high, and also the penetration normally. And to some extreme, sometimes we have a flat premium across the country. When a system is optional, normally the price cannot be flat. Otherwise, this would lead to a very high anti-selection. So my selection of countries or schemes to discuss with you was France, Germany, the National Flood Insurance Program in USA, and Flood Re in the UK. We have already discussed most of them, but just quickly to recap some of the characteristics to highlight the pros and the cons of the scheme and what is working and what is working less. In France, maybe France it's the only one that we didn't discuss much, so allow me a few words more. The penetration is very high, so the system actually is working quite well. And the insurance company are forced to offer a nat cat protection every time they sell fire policy, fire or theft policy. And the price is flat across the country. And obviously this is, on a side, it's very good because the coverage is affordable for everyone. But at the same time, it would lead to anti-selection. In this case, it doesn't lead to anti-selection because, as we can see, the penetration is almost 100%. And one thing that it's quite interesting about this program is that clearly the insurance company, as a compensation for the obligation to sell policies at a uniform price, they can cede risks to CCR, Caisse Centrale de Reassurance. Okay, and this is the state-owned insurance company, and company can decide either they want to keep the risks or cede them to the CCR. The bad thing about this scheme is that obviously since the premium it's flat and the penetration is very high, there is not real incentive to change things like protection measures or mitigation measures from the homeowners. The National Flood Insurance Program, it's another case, where probably the outcome is a little bit different. This is optional, I would say optional, but actually there are some cases where the mechanism is mandatory. And there are special areas which are called SFHA, Special Flood Hazard Areas, which are a small part of the country where people, homeowners, are forced to buy the insurance cover. For all the other, it's optional, and obviously this mechanism leads, first of all, to penetration which is not satisfactory. The penetration in the special flood hazard areas, it's only 50%, and outside it's 1%. And also these areas, the aim of the National Flood Insurance Program is to group together risks which are considered the worst risks. But obviously, within the same category, there are not all the same risks. So basically, there are risks very close to the 100-year return period, and other which are in area which have a 20 years return period. And obviously, the price might be very expensive for some of them and very cheap for others. So this leads to anti-selection, adverse selection. What is sure is that a mechanism like this, it's not sustainable, and in fact the National Flood Insurance Program has 18 billion in debt, and every year a reform to the national program is on the agenda, it's on the political agenda. Germany, we have discussed it quite a lot before, so I will move directly to the pros and cons, and just to say that the industry has developed a very good flood risk map, which are used basically by all the players in the market. And that the government is probably not really helping the development of insurance of the insurance sector in the country because of the flood relief which are paid after an event. The last one it's, that I did want to mention, it's flood re. Even this scheme has been discussed quite a lot before, and about this program, probably just two comments. The first one is that it's good because it allows insurers to offer an affordable flood insurance cover to all the risks. This is thanks to the cross-subsidy between the different areas, as we discussed before, and also thanks to the fact that the premium is kept by the premium is actually kept, so everybody can afford it. And before it was explained the mechanism of the capping. The second part that I would like to mention is that a system like Flood Re in the UK, it's really good because provides two kinds of incentives. First of all, it encourages the implementation of defenses, and at the same time, because of the exclusion of building after 2009 in floodplains, obviously, discourage unwise building in areas which are not good for building. So the mechanism, at least there are two mechanisms which are very good, and in the long term they will probably make a difference in the sustainability of a scheme like this one. Now, what I mentioned before is that my intention to go through these schemes was not to tell you something about the schemes, because I'm not an expert for them, but it was rather to understand what can be done to close the protection gap. And as mentioned before, there are many different situations which might push for one scheme or another, but there are a few characteristics which should be taken into account if we want to make big changes. First one, and this came out from the discussion we had also during the morning, there must be an interplay between all the parties which are involved. No one on his own can manage to solve the problem. And this interplay is between the public sector, and the public sector, the government needs to set the legal framework, also is in charge of the implementation of the defense measures, or in some countries like Italy and Germany, also a declaration that the government wouldn't step in for a full rebuilding or reconstruction in case of a loss. This would help to develop the insurance market. Then there is the private sector, and the private sector I would like to combine local insurers and global reinsurers. I think that local insurers, and in first instance, they are responsible to develop real solutions for people, products which make sense to them. And when I say that makes sense for them, this could be done in many different ways. For example, looking at the conditions of the product itself, leveraging on loss limit, deductible. We discussed several ways to do it before in the morning. Another thing is that they have to offer product which, all in all, they make sense to the client. Because I have seen in the Italian market sometimes coverages with very low limit and high deductible, and in the end the coverage is almost close to zero, and maybe a cover like this will not really interest many people. Global reinsurers are as well, they have to cooperate with local insurers, because even a scheme which works quite well needs to be backed by global reinsurers. Obviously, one of the criteria to make an insurance system functioning is that the community needs to be big enough, and that the premium collected, they have to be enough to cover losses, but there are always losses which are not covered, which cannot be covered by the collection of premium. And these are extreme cases, like events which happens more often, less often than every 1 in 200 years or 1,000 years. And in this case, the most effective way to manage the capacity and the coverage is to the remedy of reinsurance cover. And at last, also homeowners, they have to do something, because homeowners can first of all mitigate the risk, and mitigation allow to preserve a system which is sustainable, in the sense that the price cannot be too expensive, obviously, but in some cases, the homeowners, they have to do something to decrease the price, like with a mitigation measures. Now, I have to speed up a little bit.
5 minutes.
Yes, I will skip probably some slides. What is clear is that the government, either is included or not, somehow must be involved. And the role of the government is in many areas, like is a rule set. In the I mentioned it before. The legal framework, the government has the power to set the rules, and to make public declaration about this in the way the claims will be managed once they happen, and also prevention measures, they are regulated by the government. Also, government can sponsor somehow the starting of an insurance scheme. For example, in some countries, government, they help the development of the insurance market, subsidizing the premium or part of the premium, or collecting information, or sponsoring research and studies in the market. There are some countries, we saw before the CCR in France, where the government becomes reinsurer, and there might also be the case that the insurance system is working very well, but the government needs to buy protection from them. For example, the Fund for Natural Disaster in Mexico, and it's a case where the government is buying protection. I would like to skip the slide, maybe just quickly. This is an obvious concept, but in order to make an insurance system functioning, there are a few criteria that have to be respected. And maybe just to mention the first one, the mutuality. It's really important that the community that it's built, it's not only made by the people who are most exposed to the risk, because this would lead to unaffordable prices, and obviously could bring, probably the penetration wouldn't be that high, and the system not sustainable in the long term. Maybe just the accessibility, a few words on the accessibility. I'm not even sure this is an English word, but it comes from assess, and it's the capability of the insurance market or the insurance player to assess the risk. And we made many progresses for flood, but many years ago, flood was considered a not insurable risk. Now the technology helped a lot. Risk perception and awareness, we touched these points today. It's really important that consumers are educated, because normally there is not a lot of trust in the insurance cover, and this is because it's a promise for a payment if something happens. And in the case of natural catastrophe, the promise it's even more abstract. So consumer education is crucial, and also the way the product is designed. And maybe the last slide, it's just a conclusion where I have listed basically all the points that some of them I couldn't develop them as I wanted, but they came out today from our discussions. And the real thing that can be done to close the protection gap are to manage adverse selection through the creation of a big community of risks, which are not only the most exposed risks, but all of them together, they can define a price which is affordable for all the homeowners. The mitigation and prevention are also important because they have an impact on the affordability of the coverage. Create consumer-friendly product. This is important as well because most of the time products, customer, they don't understand products, so simplicity is crucial. And promote risk culture and awareness. Building PPPs, this is also something that came out today. In some way or another, government must be involved because the decision have an impact on the country. And last, probably stimulate the demand via tax incentives rather than the Italian-German case where we see government probably destroying the efforts of the insurance sector. And this was actually, you will see the presentation, it will be published. You can find useful publications and applications, and also another tool which is available for all our clients on our website. So if you are curious, just browse our website and you can find many information.